You've probably heard of billionaire investor Ron Barron, whose name is linked to adventurous investments and daring forecasts. His concept is more heated than the ridiculous mode launch of a Tesla Model S. Therefore, we're not just leaping into the stock market today, we're also delving deeply into the fascinating world of Tesla, where dreams are fueled with possibility and invention sparkles like lightning. We'll examine the sources of Ron Barron's optimism, analyze the variables that can accelerate Tesla's development, and negotiate the stock market's curves, where fortunes can flip around quicker than a Tesla Roadster in plague mode. So fasten your seatbelts, people, because this is one journey you won't want to miss. Whether you're an investor looking for knowledge, a Tesla enthusiast gearing up for the future, or just inquisitive about the next big thing. But first, in order to receive more, don't forget to hit the like button and subscribe to Tesla Stock News. Let's now start this video, shall we? Let's start by discussing the bull case for Tesla, focusing on Ron Barron, the chairman and CEO of Barron Capital and a well-known billionaire investor. Mr. Barron's persistence in believing in Tesla is quite amazing. As of right now, he claims to own 4.5 million Tesla shares, which is worth about $1.2 billion. Do you know what keeps him so optimistic? In a recent CNBC interview, he disclosed the exciting possibility that Tesla's shares could rise 4 to 5 times in the next 7 years. Several convincing factors support Ron Barron's belief in Tesla. He identifies Elon Musk, the mysterious CEO of Tesla, as the main motivator behind the business' incredible journey. Ron feels that truly amazing undertakings require an unorthodox visionary, even in spite of Musk's unconventional techniques and occasionally eyebrow-raising statements. Tesla's success has been propelled by Musk's continual dedication to invention and pushing limits. The battery industry. Tesla's entry into the energy storage and battery industries might completely change how we power our homes and companies in addition to the automobile sector. The energy storage business has enormous growth potential, and Tesla is positioned as a leader in this field thanks to its early entry. Ron's prediction that the company's battery division will grow to 30 times its present size highlights the scope of the possibility. Ron Barron's estimate that Tesla's yearly vehicle manufacturing might soar to an astounding 20 million units per year is arguably his most daring one. Compared to the company's current yearly output of fewer than 2 million automobiles, this would be a seismic shift. Such an increase would necessitate persistent, unprecedented demand for electric vehicles in addition to large expenditure. Ron's forecast demonstrates his confidence in Tesla's ability to expand quickly and dominate the industry. Ron Barron is a positive investor in Tesla because of the company's incredible growth trajectory, unwavering focus on cost reduction, openness to cooperation through technology licensing, and diversification into the energy storage market. All of these elements point to a business that is not only influencing the direction of transport, but also establishing itself as a major player in the larger sustainable energy sector. Such optimism highlights the intriguing story of Tesla's ability to keep altering industries and pushing the envelope of what's possible in the energy and electric transportation sectors, even though it should be viewed critically. Let's now turn to the opposite side of the debate and look at the bearish viewpoint about Tesla. Even though Tesla's growth is clearly amazing, some noteworthy issues need to be addressed. One of these worries is related to Tesla's recent significant price reductions. The sustainability of the market for Tesla automobiles has come under scrutiny in light of these price reductions taking place in the context of rising interest rates. Are electric vehicles becoming less appealing as economic headwinds build? Regarding the bear scenario, Tesla's value is another important factor. The company's current price-to-earnings ratio of 79 indicates that the market has already priced in the possibility of continued significant growth in the years to come. It might get harder for Tesla to defend its high stock price if rivals step up their efforts and the company's growth rate slows and margins contract. Having listened to both sides of the Tesla tale, it is critical that we provide a fair and impartial assessment. Investors should consider Ron Barron's constant optimism with caution, given his substantial investment in the company, despite his undeniable optimism. His perspective is inherently skewed by his vested interest, so we must approach his opinion with a fair amount of skepticism. Here, it makes sense to make sure that our investing choices are based on a thorough and objective assessment of all the relevant data. Indeed, investors all throughout the world are drawn to and fascinated by Tesla. When considering Tesla's recent growth trajectory and the enormous size of its addressable market, one could argue that its current valuation is reasonable despite the company's charismatic CEO Elon Musk and his visionary leadership in spearheading the electric vehicle revolution. Tesla has many real and significant advantages. Its leadership role in the electric vehicle industry is unmatched. The brands of electric vehicles are now closely associated with performance, sustainability, and innovation. Not only has Tesla upended the auto business, but it has completely changed it. With their Model S, Model 3, Model X, and Model Y, the company has redefined the bar for electric automobiles, shattering preconceived notions and elevating them to the status of status symbols. Moreover, Tesla's dedication to software integration and technology has allowed it to create an ecosystem that goes much beyond the car itself. Autonomous driving has been made possible by features like autopilot and fully autonomous driving, which portend a time when Tesla cars can drive themselves around most of the time with little assistance from drivers. As people turn to greener and more sustainable modes of transportation, the market for electric vehicles offers enormous development potential. Tesla is in a good position to benefit from this change in the world. The addressable market for electric vehicles is developing quickly due to government incentives, growing environmental consciousness, and concerns about climate change. Tesla's competitive advantage is demonstrated by its ability to take a sizable portion of this market. Additionally, Tesla's energy section offers additional potential revenue streams in the form of solar panels and energy storage systems. Tesla's involvement in this industry has the potential to be a significant growth driver as society's attention shifts to renewable energy sources. But it's critical to maintain objectivity and caution. Because of the inherent unpredictability of the stock market, even businesses with tremendous potential are subject to volatility and setbacks. Market share is being fiercely contested by both new and established automakers in the electric vehicle industry. Tesla's market dominance and growth pace may be impacted by this competition. Finally, a fair assessment of Tesla is necessary for wise investment decisions. Despite the company's many advantages and its leadership position in a revolutionizing sector, investors need to be cautious and realistic while appreciating the dangers and uncertainties that may arise. A comprehensive comprehension of Tesla's advantages and disadvantages will enable investors to make well-informed choices that are in line with their financial objectives and risk tolerance, enabling them to navigate the thrilling yet uncertain realm of electric mobility with discernment and wisdom. Let's now examine a few more elements that investors ought to take into account when assessing Tesla's investment potential. The much-awaited release of Tesla's Cybertruck is almost here, and there is a lot of excitement and anticipation surrounding it. This cutting-edge electric pickup truck is a major divergence from conventional truck designs. The Cybertruck has captivated consumers' attention with its futuristic, angular design and remarkable performance metrics, resulting in an incredible volume of pre-orders. Furthermore, because of its ostensibly high value, Tesla's price-to-earnings ratio has frequently drawn criticism. Nonetheless, it's critical to consider a number of important aspects when placing this valuation in context. Above all, the market's optimism over Tesla's potential for future growth is reflected in the company's P/E ratio. It may seem excessive when compared to traditional automakers, but it reflects the great hopes for the worldwide market for electric vehicles. The market for electric vehicles is set to develop at an exponential rate as people's priorities change to include cleaner mobility options and sustainability. As a pioneer in this field, Tesla stands to gain a great deal. Furthermore, a premium valuation for Tesla is justified by its recent financial performance and growth trajectory. The company has proven its capacity to gain market share, increased its product selection, and continuously produced substantial revenue growth. The P/E ratio might not look as outrageous when considered in this light. It is advisable for investors to take into account the possibility of Tesla expanding its sources of income beyond electric cars. The company's energy division offers more development opportunities that can lessen the perceived risk connected with a high P/E ratio. These options include solar panels and energy storage systems. And that's it, folks. The stock of Tesla is a fascinating topic for discussion and research. The continuous conflict between the positive and bearish viewpoints provides a nuanced picture of the future of the electric vehicle manufacturer. However, it is our duty as investors to carry out thorough research, take into account a variety of perspectives, and make well-informed judgments that are consistent with our financial goals and risk tolerance. Please remember to hit the like button and subscribe to Tesla Stock News if you like this video. I appreciate you watching, and I'll see you soon.